Thank you, Shiv. Hi, everybody. My name is Eng Tang, CEO, founder of Tozy Capital, and I'm excited to present the fourth iteration of our Bitcoin mining fund. And I'm excited that it's four because I think for me, it's been a journey into Bitcoin and journey into Bitcoin mining. And I think this is slightly a culmination of all the hard work we've been putting into. And I'm very excited to continue presenting these type of offerings, these type of investments, and of course, answering all your questions. I think hopefully this is a very informative presentation. So on the contents, we'll just go through quickly confidentiality, the investment overview, why Bitcoin mining, investment offering and details of the investment, and the planned sites, and then we'll go into Q&A. So I don't want to spend too much time on the slides, but I do want this to be interactive, as Shiv said. Typical confidential disclaimer, just let us know if you want to share it. Although we do appreciate when people do share and refer your friends and family to this great investment. I want to start with, talking about Tozy Capital and Tozy Capital Bitcoin Mining Fund 4. And you are doing a fourth iteration of this. You just closed the last one a month ago. When are you going to do more real estate deals? Well, I love real estate. I love yield producing assets. And these are some of the investments we've done in the past 12 months. It's a culmination of a lot of stuff that I've done for the last 12 years. And we will continue to provide great real estate investments. In fact, we have some available now. But I also really like the thread of yield producing hard assets. And yield producing assets in real estate is something that I want to continue to. We will continue to do that. But I also don't want to buy it in a upmarket or get overbid by several $1 million, which happens all the time, and not have great cash flow for you, the investor, and for me, because I'm an investor in every one of these deals. But I just want to highlight that we do have real estate. That's our background. We like yield producing assets, and we'll do more of them. But Bitcoin Mining Fund 4 is a combination of both yield producing assets and real estate. Our investments in Bitcoin mining has spread across America, and we continue to focus on developing strong relationships with energy providers and hosters and all kinds of technical partners. Our current Bitcoin mining deployments span across Nebraska, Georgia, Colorado, and I was just in Kentucky this past weekend, setting up our latest investment. And I want to highlight that when we first launched Bitcoin mining, we launched it earlier this year. We launched it when it was kind of a euphoric time in the market. It's just spiked. And I appreciate everybody who came with me on that journey for the first fund. It was something that you were doing for the first time. I have had Bitcoin and been mining Bitcoin, but I appreciate everyone coming to that journey. I want to highlight that we have done very well, even when the price has been not as high. And as it gone higher, we do continue to do well. So these are real returns, and I'm proud to have delivered nearly 40% returns in the first 4 months to investors in our first fund. I also want to highlight the lag between when we set it up and when we started. That's generally typical with Bitcoin mining funds or Bitcoin mining deployments in general. So my personal timeline with Bitcoin. I bought it really early in 2013. I remember the price. It was in the double-digit range, and I spent a lot of it. I didn't spend 10,000 of it like the guy who ordered pizza, but spent enough that I kind of don't want to remember the math on that. But as anything, I thought it was a really interesting technology, and I started to tinker with proof of work as well more recently, and just recently we launched Bitcoin mining in 2021. A lot has happened between that. A lot of adoption has happened. And that's why I feel very confident in introducing Bitcoin mining for our investors this year. So why Bitcoin now? Fundamentally, I believe there's a sea change this year in 2021 of wider institutional adoption. More capital markets, more institutions, more corporations are considering using Bitcoin on their balance sheet in place of cash. And it's in replacing gold in many ways. It's a great store of value, and wider institutional adoption, you're seeing big companies like MicroStrategy and even highly regulated market companies like MassMutual. When you see an insurance company join, you know that there is a big sea change happening. Increased consumer use. PayPal, Venmo, they're all creating new technology layers to be able to allow consumers to use Bitcoin as a transaction currency. It's also a great hedge against the dollar. And for me, then, real estate investor, I see what's going on in the market. I see what's going on in America. We are printing trillions of dollars. Yeah, and you probably heard all these stats of how many dollars have been printed in the last 12 months versus before. And then all the stats of inflation. I think real estate, Bitcoin are great hedges against the dollar. They have great hedges against inflation. Bitcoin has known and fixed scarcity. You can't just print $4 trillion by a century 30. And that creates a really strong, massive potential growth. And even from today, I believe there's still very strong, massive potential growth, especially since Bitcoin is just being held by less than 1% of all Americans, and continue to see wider adoption across the board. So why Bitcoin? I think hopefully we're here. We believe Bitcoin is a good asset potentially, but why not just buy Bitcoin? Well, the simple answer is, why buy one Bitcoin for X amount of dollars when you can buy with the same X dollars, buy 1.5 Bitcoin? And that's the output of Bitcoin mining. When you invest in Bitcoin mining or Bitcoin mine yourself, you put capital and energy, two forms of currencies in proof of work, to then create Bitcoin. And it's provided over time, but it's more. So I like investing in things where I have an advantage. And I like to invest in things where I would typically buy Bitcoin anyways, but I'd rather buy Bitcoin at a discount. Another thing I like about Bitcoin mining is that it feels very familiar to me relative to all my cash flow investments. It's cash flow and tax benefits. Cash flow through the form of monthly distributions, just like real estate, and dividends can be provided in USD or Bitcoin. And Shiv has helped us out in optimizing our practice of collecting your wallets and distributing on a timely manner. And as we scale up to hundreds of investors and potentially 1,000+ investors in the next year, we are optimizing for that process. But cash flow in the form of monthly payments is unique in this industry. You can invest in Riot and Marathon. They have hundreds of millions of cash on hand, and you'll see that your balance appreciate based on the share value. But you'll never get Bitcoin. You never get cash flow unless they provide dividends. Another part that I like about Bitcoin mining, similar to real estate, it's very depreciable. Amazon paid almost no taxes in federal taxes because they use 85% of their tax shelter through depreciation. They depreciated data centers, warehouses, and trucks. Any yield-producing, income-producing asset can be depreciated. This includes Bitcoin miners and data centers. So I love this investment because it encapsulates a lot of depreciation, which is provided in our typical format of investing in an LLC, investing in an operating company, and then receiving a K1 that will highlight your depreciation. So hopefully very similar to other real estate investment deals that you've invested. So this is it's a very simple Bitcoin mining fund 4. We have a very high target IRR. And I don't really want to lead with that, but that's definitely an upside. That's a realistic price target of 383K in 5 years. This is with the mindset that you're holding the Bitcoin and you're taking that appreciation as well. And equity multiple is 7.5 multiple. Now, if you sold Bitcoin, or if you took it in cash the whole time, the whole 5 years, with this realistic price target of linear growth to 383 within 5 years, you would probably only see around a 3x equity multiple. So that extra 4.5x comes from holding that Bitcoin and that capital gains from that appreciation. But it's still a great depreciation benefit, no matter what, which gives you a lot of your, it gives you a great tax shelter for your investment basis. And you have great downside protection. I think that's one of the things I like about Bitcoin mining. We are very profitable now. Our first fund is running at 85% profit margin, and that's at today's prices. But if we were at 11K or 12K, yeah, our profit margin would be low single digits. We'll still provide investors returns, but it won't be as strong, of course. We have quick return of capital as well. I think I really like that concept because it gives you sort of your capital principal back as soon as possible, and you can then reinvest it in something else or compound it. The term of investment is 5+ years, and it's not set because it's really buying miners and deploying it into Bitcoin mining and running them till they no longer are profitable or no longer work. And of course, we'll have cash on hand to repair and maintain. But at a certain point, if the competition grows in Bitcoin mining and the price does not grow in same respect, your miners will be not as new, not as efficient, not as effective, and past 5 years, it could not be potentially not profitable. But our term investment is modeled at 5 years. All these net investor returns are at 5 year. It could be longer than 5 years. And I'm targeting a 9% monthly return in the first year, break even of 10K. So very simple, very similar to our first 3 funds and investments and deployments. And we have a lot of track record in how to handle it and how to distribute it in this fashion. So very confident in these numbers. A second part of this investment, and really a separate investment altogether, is a data center income fund. And I love data centers. I love income in general. And this probably looks familiar to some of our other income fund investments, where we provide 12% annualized returns, 1% a month. So you invest $100,000, you get $1,000 a month. You also get bonus appreciation, and it's a triple net lease to Bitcoin miners. That's how we're getting that nice fixed return by actually capitalizing, deploying, and developing data centers, and then leasing it out to Bitcoin miners, which would be us as well at a market rate. But we do have LOIs by large partner companies that could take that space if we want additional revenue. So that's how it's getting secured. In addition, that triple net lease or that contract is secured against the miners itself, which are significantly more valuable than that contract. And so that's monthly returns starting next month, and that's accrued next month. So I want to just highlight that because it might take a few months to get going. But I do want to allow everybody to start having returns or start earning money as soon as you deploy capital, because we'll be deploying it and we'll be putting it to productive use. And it is a 3-year investment, although we are working on having some liquidity and redemption options in the first year and second year as well. So very simple, and we also have an Excel model that highlights all this stuff. It'll be in the data room, the offering room, which we'll send after the end of the presentation or later tonight. I want to talk about 3 scenarios. And yes, there's a realistic price scenario, and I think that realistic price is 383. That is sort of average of a bunch of different prognosticators, right? Cathie Wood says 500K plus, and there's many other analysts that say million plus, and there's many other analysts that say less than that. So a little bit of an average that does yield that really nice 93% IR, very strong for us, turn capital back within a year. But I do want to highlight that when I model these things, I also think the worst case scenario. And none of these are really that realistic. Bitcoin is not going to go up in a linear fashion to 383. It's going to go this way. It's going to come here. Now, if you hold Bitcoin, doesn't matter because you get the same amount of Bitcoin. Doesn't matter. Well, it's changed a little bit based on the fixed energy costs that we pay, but doesn't change too much. Bitcoin is not realistically going to stay flat for 5 years. That's not how this asset has performed. But I do want to highlight that, if Bitcoin stays flat and at a projected price of 65K, starting when this fund starts, this investment starts, you still have a very healthy return on investment. Strong IRR is 22% and a 1.45x equity multiple. And that's, if you bought Bitcoin and it stayed flat, you get 1x. And best of all, if it falls down by half, I think if you're choosing the option to sell Bitcoin every month, or really choosing the option to receive it in cash, you still get a very nice return. Not as good as the other ones, not something that I would target to invest in, but it highlights that if Bitcoin falls by half over 5 years in a linear fashion, so all kind of unrealistic, you still have a positive return on investment. None of these IRRs include the depreciation benefit in the first year. If you include that, that would be a much higher IRR as well. And my model does highlight that. And net investor return projections, number projections, but we do have 3 funds with one strong track record of sending 9 to 10% returns, almost 11% last month, close to 10% this month, probably. We're targeting at 9% average over the first 12 months, and returning capital back within a year. And it does fall off as we start getting to the investment terms of profit sharing, and that difficulty does increase. We will be mining less Bitcoin over time. That's just a function of the competition increasing. When 10% more Bitcoin miners are introduced into the network, that means that you, as a Bitcoin miner, receive 10% less Bitcoin. That's a trend that we will see going forward. We are buying Bitcoin miners, and lots of people are buying Bitcoin miners and deploying them, but it's all modeled out in our projections, in somewhat aggressive fashion, but also conservative fashion as well. And finally, also I want to highlight that we're also kind of being conservative, because I am not, while I am modeling out the halving event, so every 4 years, the block rewards, which are 6.25 Bitcoin every 10 minutes, reduced by half. To be in May 2020, it was 12.5, now 6.25, and in May 2024, it will be half of that. And typically, at every halving, as we call it in the industry, price does jump up respectively as well, as there's a smaller stock to flow ratio, which generally drives up the value of these assets. So, I am including the halving, but I'm not including the halving effect too. And I do want to highlight that it is low cost of mining, and it's not really to say that this is break even, because you do have the cost of the capital first. But as long as we're above 10K, we're profitable. And how do we maintain that? Well, when you have energy efficient miners and you have low cost of energy, that's how you create a very nice protection against potential bear markets. It's actually a very interesting concept, and we've seen this play out over the past few months as well. When Bitcoin price went down and it's gone up, when Bitcoin price goes down, more machines are generally less profitable. And if they have higher costs of energy and less energy efficiency, being older gen set miners or older models of miners from several years ago, they become less efficient and less profitable. Only when Bitcoin really went parabolic this last cycle, did all these old machines start getting plugged back into the network. They could be unplugged again if there's a bear market. That means an increase in production for our miners, as we are one of the highest efficiency machines and very low cost of power, in par with all the publicly traded companies. And this is how we're getting sort of low cost of mining by combining these two factors. I do want to highlight that the investment timeline is we're going to be deploying capital as soon as we receive it and we have ready orders on hand. We already have been working on infrastructure. What I've learned in this industry is that the delays are a constant. Delays are a fact of this industry, as delays out of China, delays out of shipping, logistics, and supply chains. Everything is delayed. And that's the case with almost every industry. I just bought a Model X for my wife, and it's going to be delivered in July or September. And it's going to be delivered in a while. They use the same 7-nanometer chips as, silicon chips as Bitcoin miners. I'm sure 7-nanometer. Now, while we're confident in our supply chain, there could be slight delays, and while we're targeting a end of Q1 go live date or beginning of Q2, I do want to state that your capital will be earning as soon as we receive it, and that means that you'll be receiving a 6% annualized return before Bitcoin mining starts, which hopefully is better than where you could put your money anywhere else, and that will be paid at the end of the first year. This doesn't get capitalized into an investment, but obviously we want to get mining Bitcoin so you can start earning 9 to 10% returns monthly. But still, this is a far better use of capital. I want to go a little detailed, and I know because we have the experience here now of how we run our fund management. And this is based on Fund 1, which will be replicated across all of our other funds. We plug Bitcoin miners, their computers, plug into the network to validate transactions and secure the blockchain, and reward Bitcoin for the process. And this reward of block rewards is random. 6.25 Bitcoin is rewarded. That might seem like a weird thing, but you're essentially solving a mathematical problem. And the algorithm of Bitcoin does is that it creates increased difficulty or reduced difficulty if that block reward is given out more than 10 minutes or less than 10 minutes, so that we can triangulate for 10 minutes. A little more detailed than potentially, without context, but ultimately, when you plug in machines, you get into network and that are specialized to produce terahash and solve this mathematical problem, you get potentially rewarded Bitcoin. If you plug it into a pool, which means you aggregate it with thousands and hundreds of thousands of other machines, and Foundry just announced that they are the #1 Bitcoin mining pool across the world now, and they just started earlier this year. In fact, we were one of the first clients, so I'm very happy to see them grow. So we plug into the pool, we see a Bitcoin mining, we see how much we get every day. We get that every day, and then we sweep it into the fund's wallet. So this is what we see, and I have multi-sig access to this. And then every month, we sell a fixed portion of that Bitcoin in USD to fund the operational expense, pay the rent, pay the power, pay OpEx. And for Fund 1, it's roughly 15% of the total revenue or total mined Bitcoin. And then the remainder gets sent to you, the investor, whether you choose in cash, which then we will sell at spot price and send to you as a ACH payment, just like any other real estate investment or all of our other previous Bitcoin mining investments. And of course, for those who prefer Bitcoin, and that's something I will be doing myself, I'll be receiving my investment in Bitcoin because that's what we're all here for. Hopefully, you can take it in Bitcoin, and we can help set up your wallet. We can help make recommendations. Of course, if you have all that, that'd be great. Taking your investments in Bitcoin also it's a little faster. Also, we send it to the blockchain network, and it's fairly instantaneous. Couple of hours, maybe at max, versus ACH, which takes a few more days. Most of our investors have taken their investment in Bitcoin, but we create this investment so that it's, if you don't care about Bitcoin at all, and you just like 9% cash and cash every month, You can just say, I don't care about Bitcoin. I'm going to take it in cash. And we have lots of investors who are very happy with that. We want to make sure that it is not just for people who are looking to buy Bitcoin or invest Bitcoin, but for any investor looking to get great cash flow. And the Bitcoin mining fund terms, same as last time, 5+ years, return of capital within 12 months, monthly distributions in USD or BTC, Bitcoin, 90-10 profit share during return on investment, and that 10% mostly to pay for our OPEX accounting and other processes and salary. 50-50 profit share after return on capital, and a 50,000 minimum for this investment.
I know we are going in the flow. Just wanted to let you know that we have close to 50 questions. So we're going to stay here all night. So maybe if you can wrap up in 10 minutes, that'll be awesome.
Yeah, I'm almost done. And simply stated, today's income fund, it's a pref equity deal, which means that it's a fixed return, 12%. It doesn't matter how much your occupancy is or our rent is. We're paying 12%. And we are confident, comfortable with that return number. That's how we do it in a lot of other funds. It's a safe capital stack, and you get 1% monthly returns. I also am we're working on offering, and we'll be probably offering early liquidity so that you can be redeemed in year 1, 2, or 3. So if you know you need to get your money back within a year or with 13, 14 months, maybe you want to buy a house, and you want to deploy capital in still a very productive asset, getting 12%. This is an option for you as well. And of course, it is 3-year hold time if you want to stay the whole time. So we will be evaluating potentially extending that optionally. And so I want to just wrap up these presentations with where we were, where we're going. And we talked about home base. And home base for me is really certainty. What I've been doing for the last 3 months has been traveling all over the country, talking to everybody in the industry and trying to get a home for us, a predictable home with low cost of power and green renewable energy. And we believe we found that in Sandusky, Ohio. And it's an ex-GM plant that we will be subleasing out, not purchasing, because it's 1.3 million square feet. We actually don't need that much space. And Jim, I'm going to call him tomorrow to close the deal. I think we are very excited to be in a state that has very low power. But we also have several other sites that we're expanding and working on. And throughout 2022, we will be continuing to grow so that we ensure that we can have a home, which has been the bottleneck for everybody in the industry. It has been a bottleneck for anyone trying to get Bitcoin miners going. There are stories of barges in the Pacific where miners are just floating around on ships because they don't have places to plug in and mine Bitcoin. And we have some great green energy sources and included with the grid, but allows us to have lower cost of power. Final notes here. We will have investment dashboard just like our Fund 1. This will allow you to check on a daily basis, real time, what your current performance of the fund is. Essentially, will be an API directly to our pool. We will also allow, like all other investments, self-directed and solo 401ks. We're partnering with Alto IRA, but you can go to any other IRA, self-directed IRA fund. Alto IRA specializes in crypto investments, in addition to like Rocket Dollar. These are great low-cost solutions, but this investment is set up so that you do remove any UBIT exposure or any self-employment taxes through a block entity. We also will be, well, I don't want to say we also, Shiv, you might kill me on this. We are potentially looking at exploring, no promises, compounding your dividends, compounding distributions, and potentially future investments, or at the very least, providing you a small yield as we stake your Bitcoin. That's something I'm doing. I like to earn on everything I have, including all my assets, including Bitcoin, and I'm doing that, in DeFi, and that's also in DeFi. In the future, no promises, and Shiv will kill me. We get to really hire potentially some very smart folks and good project managers, we will potentially be offering borrowing against your Bitcoin. So you've earned 200K of Bitcoin. You want to invest more, the 200K, you don't want to sell your Bitcoin, good on you. You could then leverage your Bitcoin, and we don't need to do it for you. We can recommend some good platforms that does it. We can even show you how to do it yourself. Like, it's probably easier. And you can leverage your Bitcoin if you take your collateral value, 200K, for example, borrow 50% LTV, and within a couple minutes, you have $100,000, just like an SB lock, but it's a Bitcoin line of credit. And that interest rate is not that single digits usually. So to conclude, we are an experienced team for iteration. We have strong technical partners and JV partners all along the way that I'm not really highlighting, but that we're part of, and we're leading into. It's a levered bet into Bitcoin. Why buy Bitcoin when you can invest in Bitcoin mining? I think that's just a simple answer. Fast return of capital and high IRR. Get your money back within a year, projected.